Hi everyone, in the previous video we started looking at analyzing inventories under FIFO. In this video we are going to look at reviewing LIFO and we are going to compare and contrast the results for cost of goods sold, ending inventory and net income under LIFO. So LIFO is last in first out, so we are selling 8,000 units, so we are going to go from bottom to top. The first thing that we are selling is these 2,000 units at $14 per unit. Then we are going to sell another 2,000 units from this part at $13. And then we are selling 8,000 units, so these account for 4,000. We are missing another 4,000, and we are selling that 4,000 out of this part from the inventory. So let's calculate the LIFO value. And that's going to give us cost of goods sold under LIFO. Let's also look at ending inventory under LIFO. And what we are going to have is we are going to have the remaining 1,000 units from this batch at $12. And then we are going to have under LIFO, we are going to have another 1,000 units for $11. Remember, we purchased 10,000 units, we are only selling 8,000 of them, so 2,000 is remaining. Ending value under LIFO is the multiplication of these, and the sum is going to give us the ending value under LIFO. So the ending value under LIFO turns out to be $23,000. Now with that said, we can compare and contrast, start comparing and contrasting FIFO versus LIFO. Under FIFO, in an inflationary environment, cost of goods sold is less than cost of goods sold under LIFO. Again, in an inflationary environment, the ending inventory under FIFO is greater than the ending inventory under LIFO. Now, let's compare our income statement as well. Revenue is still going to be the same regardless of the inventory valuation method we use. Cost of goods sold is what's changing. Under LIFO, cost of goods sold is 102,000. SG&A is not going to be impacted by it, so it's going to be still $10,000. And then we have income before taxes, revenue minus cost of goods sold minus SG&A. Then we have our tax expense. Our tax expense is still 10% of the income before taxes. And our net income is income before taxes minus taxes, $43,200. So when we compare net income, we are going to see that FIFO is producing more income in an inflationary environment compared to LIFO. That's the upside of FIFO. The downside is under FIFO, our tax obligation is greater compared to the tax obligation under LIFO. In the next video, we are going to analyze the concept of LIFO reserve.